Hello, this is Paul Martin. I'm with Investor Connect. Today we're here with Greg Bohlen, Managing General Partner at Union Grove Venture Partners. Greg, thank you for joining us.
Sure. Thanks for having me.
Well, great. It sounds like you have a great list of portfolio companies on your list there, and I was just curious, maybe you could tell us more about Union Grove Venture Partners and how you guys work.
Sure. So Union Grove is that invests 70% in funds, 30% in directs. And on the fund side, we have in the past put 80% in access funds that typically people cannot get into. And the balance we've got out to try and seek partnerships that we think are up-and-comers that are likely to generate alpha in the coming cycle.
And what's your criteria for determining that? What do you look for in these deals up front?
So we're looking for people who generally have come out of other partnerships that have a lot of experience, that have good track records, that we think are in interesting segments of the marketplace.
And what are the interesting segments to you today? I know it changes from time to time, but what are the ones that you look for that really pique your interest?
Sure. So we're interested in the Internet of Things, artificial intelligence, autonomous vehicles, robotics, big data, the body-machine merger that's happening, blockchain, augmented and virtual reality, and we're always interested in things that can change the face of healthcare.
Well, it sounds like your team focus is making the criteria decision. If it's a good team, you do it as opposed to sector or stage or what have you. Is that correct?
Yeah, that's our first criteria. Is the team going to be an exceptional team? What's their track record? And what's their experience with where they're looking to invest and put money?
And how much do you normally invest in these initial rounds, and I guess there's follow-on investments afterwards?
So on the direct side, we're investing anywhere from $100,000 to $6 million. Depends on the stage of the company, depends on the quality of the opportunity, and depends on where the space is.
And what do you find is the key factor in these deals, aside, drilling down on the team piece? You talked about experience in the sector itself as well as the past track record. How do you match those two up? If somebody comes from one sector going to a new sector, how do you determine that that's going to be a good fit?
Yeah, well, it's a difficult challenge because a lot of times it doesn't work. People who are experienced, for example, in a technology company trying to scale across to a food company, typically it doesn't work very well. So we're leery of those kinds of transitions. People who have built one software company and are trying to build another software company, on the other hand, we're pretty interested.
I get you. Okay. So they do have to be in a related space, doing related type business model or sector or something's got to be similar in order to make that transition work.
Yeah, that's our experience, Paul. We find that investors typically, or CEOs and management teams typically have a relatively steep learning curve that can be very expensive if they aren't experienced inside of the space.
Well, I've had some investors tell me that they look for not just one person that has experience, but one person, or rather a team of people that have experience and have worked together before. Have you ever found that dynamic coming up in your discussions where they have to have worked together at some level in order to be effective?
Yeah, well, that's the magic pony. You don't find it very often, but when you do find it, it can be really special. And we love to see those kinds of teams come together, put what we call putting the band back together for a second or a third time around.
Why is that so hard for people to do? I look at groups like Pixar where they turn the model on its head and just said, okay, it's the same group every time, and then the efficiencies come out in a great way. Why do we not see startups do that more often and just keep the core team and then cycle through more quickly through the startup because they've got the experience and the track record and all the wonderful things that come with that?
Well, primarily because team members have lives. And so as a consequence, I may want to become, if I was a COO before, I may want to move to a CEO role. If I was a CFO, I may want to move to a COO role. People's opportunity sets expand, and they have hopefully scaled themselves up into places where they can do better things that are a higher and better use of their time and more rewarding. So when it happens that, and a lot of times too, there are poaching reasons that teams can't leave because when they were bought, they signed agreements that they would not spin out and leave in team or leave in mass. So there are a lot of reasons why teams don't always move together to do another company. But that's why when you find it, it's so special and so interesting.
Right. Well, do you find geography still a factor, or do you think it's not a factor at all anymore, whether it's in the Bay Area or the New York or Midwest? Does the location of the team make any impact on your decision?
Well, the cloud has made, and as a result, we're finding that really good companies are springing up in places where they haven't necessarily been before. And so we're finding the opportunity set a little more diverse than we previously have. We're excited about that because, guys, I'd love to see companies become successful outside of the Bay Area on a regular basis. And that would be, I think, a very healthy sign for both our country and for venture capital in general.
It just seems like location matters less and less. And, of course, team has always been at the top and will always be at the top. And other factors, proximity to customer or to partners or something else might have an advantage, but beyond that, there really is no difference anymore.
Yeah, no, it's getting, like I said, I think it's getting easier to be successful. The cloud has made life substantially different for technology startups than it previously has been, and I think it's a good thing.
Yeah, absolutely. Well, after team and after the sector and stage you mentioned, what other criteria do you guys look at to make a decision? There's many deals out there, and of course you can only do so many. What's the last requirement that you look at?
Well, the other criteria that we look at are things like market itself, what's going on, building products for, what margins are sustainable in that marketplace, what kind of protectability does their product or their technology have, and last but not least, what kind of growth opportunity exists in the current marketplace for the product or the product series that they're developing.
Okay. So you weigh all those together and then you make an investment. What happens after the investment with your group as far as what can you bring to the table to help these guys after the investment's been made?
Well, that's, it's an interesting question because I think every venture capitalist will tell you we are, the first call that the management team makes when they're trying to find help or trying to find a solution. And we know that that's not always the case with us, but we do try and be very helpful to our management teams by digging in, making introductions, by helping them with challenges that they have on the marketing side, because we have seen a lot of businesses and we know what does and what doesn't work, what the metrics should look like, how to build funnels, how to build reporting mechanisms to make sure that they're monitoring the sales of the marketing staff appropriately. So that's where we jump in most of the time.
I see. Okay. So helping put in good operating practices, good operational structure is the value add you guys bring.
Yeah, along with introductions to customers. And ultimately, that's what everybody cares about, right? Right.
Yeah, well, that's quite a bit of value there. If you can help them achieve sales and get introduced to the right people, there's big value there for sure. Well, in the last few minutes we have here, what else should we know about Union Grove Ventures that we haven't covered so far?
We are always looking for interesting opportunities to both invest in and interesting firms that we can partner with to build great companies.
Well, that's great. Well, so what's the best way for people to get in touch with you? Is it LinkedIn or is it website or other?
Best is to do an email, and we've made our emails very simple for that reason. So mine is g@ugvp.com.
Okay. Well, we'll put that in the show notes and let people contact you directly through email. That'd be fine. It is one of the most straightforward emails I've ever seen. So there's no barrier there for sure.
That's the idea. Make it simple.
Okay. Well, thank you so much for taking time. Love to have you back to dive into this topic in the future, but appreciate your taking time for now.
Thanks a lot, Hall. Appreciate the opportunity.